Did you know that Chicago had even less homes for sale than in 2022? The second biggest buzzword of the last few years, the inventory word. What is our inventory looking like? How did we do in terms of that? Our prediction.
Yeah.
And Samuel, we totally missed the mark in this. I think the entire country missed the mark in this, so I'm not going to put us just on the chopping block because this was something that really impacted everybody.
Yeah.
Our prediction was that the home inventory was going to remain relatively flat, possibly a slight improvement.
We didn't do that, unfortunately.
No. In fact, we got really, really beat up in the inventory.
Yeah. Well, remember, inventory is essentially basic economics, supply and demand, and buyers being the demand and the supply being homes for sale. We saw homes come down because sellers had low interest rates, and so they wanted to just hold on to it. And then buyers, we thought were going to stop wanting to purchase as interest rates kind of went up, or at least slowed that demand down.
Sure.
Unfortunately, we projected that. You think just basic economics with interest rates going up, it would affect that.
Sure.
And it didn't.
I think the biggest place that interest rates affected our inventory, right? And we had a lot of things going on in the past in 2023. Some of them that were very much curveballs and really caught us by surprise. But people were so resistant to give up their interest rates. They were so resistant to, we'll make this property work just a little bit longer. We can squeeze it out one more time. So there were a lot of people that if they didn't have to move, sure, it felt comfortable to stay in their 3% interest rate versus looking at a 7.5, 8% interest rate. That's a big difference. Some of them, it was because they couldn't afford the move-up house, right?
Yeah.
They just couldn't afford that aspect. I also had a large sector of my clients that they wanted to play the market a little bit. They wanted to hold on to whatever they had because of the interest rate and to keep that
as a rental.
Cheap money as a rental. And those were people that had never really thought about having a real estate portfolio at all. But that way they felt like they were still keeping that. They weren't losing that cheap money as they moved on to their next property, which once again, it's a phenomenal strategy for people. But when it comes to our inventory, if that's not coming back on the market, the inventory is hurting.
Yeah.
Now, overall, our inventory in all of the neighborhoods was down 25%.
Which made sense. I mean, if you look at the last 3 years that we've really had, each year, normally what you see pre-pandemic is inventory goes up in our seasonality. So winter months, we typically go up to 5 to 6 months of inventory. Now we kept low in that winter months the last 3 years and have still gone down. And so,
and that's the thing is we have to remember a couple different points of that. That's 25% less than last year.
And we were down 25%.
We didn't have enough last year. So there's two sides of that. Number one, it's really drastic. But on the same token, we have to understand that smaller number differences make a bigger impact, just like we were saying in terms of that. But we had 25%. In fact, I can remember times in this particular market where I pulled the inventory for every one of our sellers before we go on. And there was a moment of this past year where I was looking for a 2-bedroom, 2-bath in Bucktown to show comparisons to a seller. And that particular market, when I was looking, was down 53% in terms of inventory based on the year before.
Yep.
That's huge, and that in itself, I would say the inventory has so much more to do with how the rest of the market really prevails. It impacts everything else we do from that perspective. Now, if we separate that out based on our urban neighborhoods and our downtown, our urban neighborhoods were down 30% overall, which is, once again, that's a really big number. And our downtown markets?
We're only down 16%.
So
again, remember eating up that inventory that we kind of talked about.
Yeah. So more inventory.
It's good to see.
Totally. It's great to see. But also understanding those areas that didn't have, our north side neighborhoods had less inventory and they saw more price appreciation.
Yep.
It's always going to see that. The less homes we have to sell and the more people that want to buy them, the stronger the pricing will prevail.
Yeah. And the downtown market is at finally a normalized rate.
For certain.
I mean, it's at 6 months inventory, which is what we want to see in a standard market.
We're hoping for everywhere.
Yeah, I know. But I mean, even during the pandemic, it went up to what it was at the housing recession.
Yes.
It was at that rate.
Yeah.
That's insane. So we gobbled it all up, which is good.
Yeah.
But it's interesting that pricing is going down there because of it.
No, it's the
because you're
Normalization of the market.
yeah. But also, I think the other point that we need to also make is even though we're down in inventory this year, we are still outperformed. We sold more homes than pre-pandemic.
Sure.
So remember, 2021 was like the big year, and then we keep on going down. But
For
even
certain. No, and it's
statistically,
so
which-
relative.
Relative, yeah, exactly.
So relative. In fact, I was at a seminar the other day, and I remember
Oh,
one
you
of the
did the volume, right?
the volume of the country.
Yeah.
And I'm going to butcher these numbers a little bit. I don't have them in front of me, but essentially it said that
We won't hold you accountable.
in 2020, the entire country did about $97 billion worth of real estate.
Yep.
In 2021, that number went up to 23 billion.
Yeah.
So that was the year that we saw the really big rise.
Yep.
In 2022, it just filtered a little bit off of that number.
Yep.
So it was right around there again. And then in 2023, it was year to date, but that number was back into the high 60s.
Yeah.
So we did, as a country, half of the volume of previous last previous years. But here was the kicker. We then compared that number, the 67 billion, to not to 2018. We compared
19.
it to 2011.
Oh, dang.
The worst
Okay,
year
cool,
of the
yeah,
housing
yeah.
crisis.
Housing crisis.
That number was 37 billion. So we were still, even in the toughest year that we've seen, we were still double almost what we were at the
In
peak
total
of
volume.
that. So it's all relative, right?
Yeah, totally.
What is inventory going to look like in 2024?
I'm going to go out and say it's going to be the same.
Okay.
I don't think it's going to go down because I don't think it can go down any more. To be honest.
Don't say that. It can always happen.
You really can't take anything more off.
Right.
So I'm hoping that it's probably going to be about the same.
So you're going to say it's about the
I don't
same.
I don't think it's going to increase at all.
I'm going to go a little bit against you. Just a little
Okay,
bit.
okay.
I think we're going to see a little bit of a tick up in that because I feel like this year it was very easy for people to sit tight and say we can outlast this.
Yeah.
Right? I have clients myself that were hoping to do something and then finally threw in the towel and said, you know what, at those interest rates, it doesn't make sense.
Mm-hmm.
I think those people, if we can get those interest rates down and we can start seeing things more sixes, and there's been a little bit of discussion is if any point do we scratch that 5 surface? I think if we see anything like that, I think that will feel like a little bit of a light to a lot of people who will then say, let's move on. Now, it's still going to make for a very undersupplied market. I agree with you on that. We're going to be undersupplied because I think that puts more buyers back in. But I think that our inventory low point, minus world catastrophe, which God knows we've had a ton of that lately. But I do think that we're going to see a hair more inventory based on the fact that I think, and this is just part of this is from who we follow and all those things. Part of this is just my feeling towards Q4 of people that I had come to me saying, hey, we can't fit in this house anymore.
Yeah.
We can't do this anymore. We did it for the year. If things get a little bit better for us, we're going to look to do that. So I think we're going to see a little bit more.
Yeah. So are we talking about like the amount of the amount of properties on the market for sale? Or are we talking about like
Overall
the month
inventory.
supply of inventory?
I'm going to say overall inventory of homes at the end of the year.
Gotcha. Okay. So month supply of inventory, I think is going to stay the same because I
Agreed.
think that is going to outpace like
Because
the
that's
supply
going to
and
be with the
demand.
number of
I think it's
buyers.
going to be supply and demand.
I'll agree with that.
Inventory, the amount of homes coming on the market.
Wait,
are
Samuel's
going to go
changing his
up.
answer.
Sorry.
All
Yes.
good.
Inventory, the amount of properties that will probably come on the market will go up, but I think the amount of demand is going
gonna
to
go up too.
Pace that. with
Agreed.
it. So yes, I agree with what you were saying.
Awesome.
All right. So
We both agree with the sense that we do expect to see a little bit more in the new year, but we do think that there's going to be enough demand to keep it feeling pretty tight in
Pressured.
the marketplace. For certain.
I think it'll still be pressured.